Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is the 15th of January already, 2020, 5 a.m. Eastern Standard Time. Let's talk news because something's out there, something's going on that we don't know about yet, that the markets are beginning to price in. I suspect a couple of things. One is Iran. It may not be fully resolved, the issues there. There were attacks on military bases in Iraq. I believe it was yesterday or the day before. And overnight, this headline comes out: Europe triggers Iran deal dispute mechanism in drastic measure to prevent nuclear advancement. And I'll just bring it down here. European powers, this is typical. European powers officially see Iran in breach of deal. EU punitive actions are now on the table. Is that what's causing my concerns? And I'll go over what those concerns are. Signals by the market in a moment. Could be. Or it could be this. Repo shrinkage begins in February. That's when the Fed cuts each term repo by $5 billion. This is not a shock. This was kind of projected, but it's now on the table, and it's not that far away. And I would be curious to know what happens to the markets when this does begin, if this does begin, and how quickly they go back into the markets and not only bring that back, that $5 billion, but then buying more later dated maturities, 5-year bonds, 2-year bonds, 30-year bonds, etc. And that will impact longer term yields. And with that, will light a fire under inflation. Now, yesterday, inflation came out a bit hot. It was definitely hotter than expected. So, we already have inflation according to the CPI, which the Federal Reserve really doesn't pay attention to. It's running hot, and just something to keep an eye on. And we've been talking about this for quite some time now. In fact, I want to go to a chart. I'll show you Bitcoin not overnight, from the past couple of days. And we've been talking about this. I was saying Bitcoin is going to break out. Bitcoin is going higher. We were as high overnight as 8,900 before we pulled back. So it looks like we're going to consolidate here a little bit. But a couple of weeks ago, I did some analysis, and I'll bring it up, about Bitcoin and its correlation to the Pringles Inflation Index, to the Consumer Price Index. We'll use the Consumer Price Index. Here's a monthly chart. Here is the correlation at current. Normally it trades in tandem with the CPI, but it took a dip here. But now that correlation is back in effect. And look at what we're doing here. I have overlaid on this monthly chart the CPI in dotted line, going all the way back to 2014. And you can see that we have a bull flag setup forming on Bitcoin, and we are at the precipice of a major breakout on a monthly basis on Bitcoin. So significant it is if we break out above this upper band of resistance. I think that we'll be at 13,826 in a heartbeat, and quite possibly at all-time highs by the end of the year. So keep an eye on this correlation. CPI is clearly moving higher. Again, in dotted green line here. In candlestick is Bitcoin, which is on the precipice of a breakout on a monthly basis, not to be ignored. Let's move on to the pre-market activity. We'll begin with gold. And this is what I mean, that there are signals by the market that are causing some concern. One is the definite parabolic move higher on stocks like Apple, on Beyond Meat. Yesterday morning on Beyond Meat, I said, we're going to 130s on Beyond Meat. I didn't think it was going to happen yesterday in one day. I'll put the link to the video at the end of this one, and you can check it out. I mentioned it yesterday. Beyond Meat is going up to the 130s, and it hit it yesterday before backing off. What else am I concerned about here? Gold. Gold, besides Bitcoin, is telling you a story. Overnight, we are up $6.70. We're above the 153 mark. Let's go to a 4-hour chart. This is a bit sloppy. And here, you can see that we broke out on the 21st of December. Did I just say the 21st of December? We broke out on Tuesday. I was looking at the 21st hour. We broke out. It's a bit early. We broke out, pulled back, retested overnight, and we are now consolidating. We're looking for a continuation move higher here on gold. So what gives? Why are people buying gold when you have the markets at all-time highs? Somebody's preparing for something. And we have been in the markets buying up the gold miners yet again. Let's take a look at the US dollar. Dollar's holding in there. Still holding in there with a 97 handle. Good price action. So the dollar's got a bit under it. Gold has a bit under it. Bitcoin has a bit under it. That's telling you a story. There's fear out there. There's concern. Let's take a look at oil. Oil is obviously pulled back since the resolution of the supposed resolution of the Iranian issue. And we are now consolidating along this support level. And we've been consolidating there since Monday morning. Let's do a deeper dive here. The energy sector has been looking pretty good these past couple of days, despite the weakness in oil. I'm not ready to go buying oil yet, but it's certainly interesting. What I would be looking for here is a rally up and through this upper band of resistance. That would make oil interesting. And I would suspect that if you have fear, especially if it's fear that's driven from concerns out of the Middle East, that you're going to see a bid under oil. So let's keep an eye on it. Palladium has been on a tear. I want to check out that chart. I mean, that's just glorious. And the reason for palladium rallying is because of its usage in eco-friendly products. As I mentioned yesterday, I know that platinum is used in catalytic converters. Looks like we got a bit extended here. I'm not exactly sure what palladium is used for. All right, so it looks like we've had a nice run here, but we're petering out a little bit, short term anyway. I mean, if you take a look at a weekly chart, before we go to that weekly chart, take a look. We were very overbought, pulled back, rallied, new highs, broke out of this triangle formation. But we're getting a bit extended here. Let's go to a weekly chart. There's still room to the upside here on a weekly basis. This is one pretty chart. So I'm not ready to call the rally in palladium over. And you may be saying, RSI weekly basis, Bob, aren't you seeing that? I'm seeing it. When you see an overbought indicator like this, RSI in particular, over the 70 mark, don't listen to the rule of thumb that you need to sell, you need to short. If you short, you're going to go broke. Guaranteed. Just a matter of time. It's a sign of strength. You need to look for divergences, right? Making new higher highs and RSIs rolling over. That's a divergence. That's when you want to get concerned about the stock, or in this case, a commodity, being overbought. Right now, the path of least resistance is to the upside. It may be a contrarian, but we never, ever forget the trend is your friend. Never, ever, ever. Primary lesson number one. Let's go to the stock market futures. You guys are quiet this morning. Very quiet this morning. Not many people got out of bed from this morning. All right. Here's what I'm talking about in terms of divergences. This should be very concerning. And I pointed this out several days ago, where we had RSI putting in lower highs and lower lows, but you could rationalize it. We were consolidating. Now, in this new round, we're putting in lower highs, on RSI. The problem is we're breaking out to new all-time highs. And we also have broken down below, this is a 4-hour chart, yes, 4-hour chart. We've broken down below this lower band of support on a 4-hour basis. Now, that should be concerning, but I will give props to the S&P bulls because they are holding the line here. $32.77 is support. They're rallying the S&P off of. Looks like they have the computers in check here. And they're going to try to run it one more time. But be careful. Keep an eye on this negative divergence on RSI. Let's see if it exists on a daily chart. And it does. But we are consolidating here. I can't ignore this consolidation. So it looks like they're going to pop it up higher one more time. Let's go to the Russell. The Russell broke out yesterday. We were putting in lower highs in RSI. We are seeing a double bottom setup. We are moving higher on RSI. We held the breakout yesterday. We did close off the highs of the day. We are now retesting. So the Russell may be a buy today. 4-hour chart. We are flirting with giving up the support level on a 4-hour basis. So we need to see where this bar closes. This is a 5 a.m. bar. It closes at 9 a.m. Eastern Standard Time. It must close above this green line here. If not, especially if we give this up and we break down to new session lows, the breakout yesterday on the Russell 2000 is in jeopardy. But right now, it still looks healthy. I don't like the fact that we broke out yesterday. We tapped the 2 and 3 standard deviation Bollinger Bands, and we backed off the highs of the day. Could be normal price action, but concerning. And I don't like the fact that the Russell 2000 behaved poorly yesterday. So I would be very, very careful in this market, especially when you see. Let's go to Beyond Meat for a moment. Now, I say this from the perspective of somebody that's traded in 2 major bubbles. One that I wasn't necessarily prepared for because I wasn't into technical analysis as much as I am right now, and that was the dot-com bubble. And frankly, back then, you didn't need to be a technician. I mean, through the late 90s, all you needed to do was throw a dart at a stock ticker page and you made money. You know, you bought the shares and everything went up. It's when the top got put in that you needed to be a technician. Let's go to Beyond Meat. Now, that changed in the financial crisis. I was a completely different person. I had been to the puppet show and I saw the strings by then. All right. Where's Beyond Meat? All right, so here's Beyond Meat. Yesterday morning, I was talking about this chart. This is a daily chart. I put this line up and I said, we're going up here. Up to the 130s, mid 130s. We were trading here and we shot right up there and we were rejected in a heartbeat. Now, does that mean that we can't press up higher yet again? I hope we do. I hope we do. And I think we can press up higher because RSI, it may be over 30, but it could still go a lot higher, especially with a stock like this that has a lot of hot money chasing it. We are still trading above the 3rd standard deviation Bollinger Band. We do have a filled candlestick. But look at this volume. It's insane. It's insane. You know, you want to short a stock like this, you better be right, and your setup better be perfect. And I would look to buy put options. And what the chart that we'll be looking for is a 15-minute chart looking for a lower high you can see that yesterday on Beyond Meat, 15-minute chart, we shot up, pulled back, consolidated. Then we broke out later in the day, pulled back, doing a retest of support. Good stuff, healthy stuff. I have little doubt they're going to make another run at it today to try to take out resistance that it could not take out yesterday. So members tonight will be talking about a strategy for opening up a put option position if the setup goes our way. Let's go back to the futures. Here we go. Here's the Russell 2000. It's finally starting to move up higher above that resistance level. So, good stuff. What else do we have here? I have a few more minutes. Not gas. Not gas. Yesterday, we booked profits on UGAZ again yesterday. It popped up higher. We traded it last week. And again, these are not day trades. We don't day trade. This was a swing trade. And yesterday, shot up higher. We're still in a downtrend. Remember, so when the market hands you a profit on a stock, when you're long on a stock or commodity in a downtrend, when it pops up higher, grab that profit. Grab it. Because the trend is your friend, right? The probability of a continuation move lower is very high. So we popped up higher yesterday. What happened by the end of the day? Bearish key reversal day. Here you have it on a daily basis. This is today. Here's yesterday. Bearish reversal bar. We were in an ascending wedge formation or a megaphone formation. We gave it up yesterday. Very, very bearish price action. And we're following through to the downside today. So I would avoid that gas. Avoid it. What else do we have? Bonds. Hey, RL, good morning. Where you been? I haven't seen you in a few days. Bonds moving up higher. This is what you want to see. If you're long of gold, you're long of commodities, and you're long of stocks, you want to see bond prices move up higher at current. Why? Because it forces down yields. That's what the market is trading off of right now. That's a good one. So the markets are trading on low yields. Yields are pulling back this morning, and you're seeing a bid put under gold. Silver should be catching a bid. This is a pretty chart. Let's check out silver. I'm losing it today. Where's my silver? That's sugar. Oh boy. There we go. Okay. All right. So silver is up 0.5 percentage point. It has pulled back with gold. And we are breaking out on a 4-hour basis. So we are currently long of silver. We have our breakout. We have a retest. So it appears as though we're going to start building, as with gold, the right side of a cup. And I'm not saying it's going to be a cup with handle, but the right side of your base. Let's see what else we have out there. I want to check out the euro. And we're going to leave off with Apple because I am begging to short Apple. Euro's consolidating nicely. And again, the reason why we're watching currencies, folks, is not because I'm a currency trader. It's because the euro makes up about 55% of the Dixie, which trades against the US dollar. So if the euro is breaking out, that means that the dollar, in all probability, is breaking down. Especially if you add in the fact that the Japanese yen, which is the second largest component of the Dixie versus the US dollar, is rallying as well. So Euro's consolidating, poised for a breakout. We're putting in higher lows. We were putting in higher highs. Let's see whether or not that resumes. Let's check out the yen, because if the dollar's pulling back, that means that the yen took it on the chin. That means that our precious metal trades will continue to do well. Think about this. The dollar is strong at current. If you were to replay this tape last year, the dollar's strong with a 97 handle. And when I mean last year, I mean this time last year. Strong US dollar, up US dollar. Gold would have been down. Silver would have been down. Guaranteed. Now, the dollar's trading up. Silver's trading up. Gold is trading up. Could you imagine what would happen if the dollar finally broke? What will happen to gold and silver? And that's the trade that we're betting on right now, because there's just something out there. There's a fear trade out there. There's a reason why the dollar is strong and gold is strong. There's a reason why. It'll come to the forefront eventually. But people are stocking up for something that's not good. So more to come here. I want to leave off with Apple. Apple, we've been stalking, trolling, I guess. I guess that's the appropriate name nowadays. Trolling a stock to short? Would that be appropriate in pop culture today? Oh, so Apple had a pullback yesterday. All right, so you saw your first distribution day on Apple since the 3rd. Now, the real reason why I like Apple to the short side is not necessarily RSI, which was well above 80. It's now rolling over. We haven't taken out the lows of January the 7th yet on RSI. So the trend is still up. These Stokes are very, very long in the tooth. MACD histogram losing momentum. You can't go shorting yet. The reason why I love it to the short side is not the daily chart. It's the weekly chart. So more than likely what we're going to do is we're going to begin accumulating longer dated, at least 3 months in duration, longer dated put options. And I'll probably finance the trade, at least partially finance the trade with the sale of an out of the money or deep out of the money option and purchase an out of the money option. And that'll help finance the trade somewhat. It'll cap your profit potential, but it minimizes your risk, which is always good. So Apple, we have RSI on a weekly basis at 89.32. MACD histogram is leveling off some, so momentum is beginning to wane to the upside. And what we'll be talking about is an entry point with members. And we're not there yet. All right, so members, more to come here. And with that, folks, everybody have a profitable trading day. If you can hit that like button, I'd really appreciate it. And I will talk to you soon. Be well.